Hello guys, welcome back again with my channel. Don't forget to like, share, comment, and subscribe. An index of global stock market falls while short-term US Treasury yields rose on Friday, after Federal Reserve Chair Jerome Powell said the US economy will need tight monetary policy for some time before inflation is under control. The dollar US early loses to turn positive against a basket of currencies, while gold, which loses appeal as interest rate rise, fell after Powell's comments. Tight monetary policy for some time means slower growth, a weaker job market, and some pain for households and business, Powell said in a speech to the Central Banking Conference in Jackson Hole, Wyoming. Reducing inflation is likely to require a sustained period of lower trend growth. Moreover, there will very likely be some softening of labor market conditions, Powell said. He did not hint at what the Fed might do at its upcoming SEP 20 and 21 policy meeting. Officials are expected to approve either a 50 or 75 basis points rate increase, reflecting increased change of a third straight 75 basis points rate hike. It was hawkish as expected. Powell's message is clear. The Fed is far from done in its fight against inflation, said Antoine Buffett, senior rates strategist at ING in London. MSCI's gauge of stocks across the globe shed 2.47%, its worst day in more than 2 months. Wall Street's main index fell, with Powell's comments dragging down mega-cap growth and technology stocks. His comments were hawkish. He's keeping the pedal to the metal here when it comes to policy to fight inflation, said Lindsey Bell, chief money and market strategist at LA. The Dow Jones Industrial Average fell. European stock sales slid as investors also fretted over downbeat German consumer sentiment data due to rising energy costs. Consumer morale in the Eurozone's two biggest economies diverged starkly in August as French consumers benefit from fresh government measures while concerns over rising energy bills hit their German counterparts, surveys showed on Friday. The Pan-Europe index lost 1.68%. US two-year Treasury yields briefly reached their highest level since October 2007 before stabilizing near two-month hikes after Powell's comments. The two-year U.S. Treasury yield, which typically moves in step with interest rate expectation, rose on Powell's comments and was last up 1 basis point. The yield on 10-year Treasury notes was up about 1. The rise in short-term rate extended the yield curve's inflation, which is widely seen as signaling an upcoming recession. The closely watched gap between yields on 2 and 6 and 10-year Treasury notes was at 35 basis points compared to means 31 and 31.3 basis points before Powell's speech. In currency markets, the dollar erased early losses against a basket of currencies following Powell's remarks to trade up 0.30% at 108.8. The euro, which had edged higher following a Reuters report that some European central bank policymakers want to discuss a 75 basis points interest rate hike at their September policy meeting, gave up those gains to trade down 0.07%. Oil prices ended higher on Friday, boosted by signal from Saudi Arabia that OPEC could cut output, but trading was volatile as investors digested and ultimately shirked, and the Fed's warning on economic pain ahead. Okay, that's all from me. Thank you for watching. Don't forget to like, share, comment, and subscribe. See you.